Good afternoon, everyone. Hey, this is Bruce Marshall from Simpler Trading with the nightly video update for Wednesday, October the 28th. Hope everybody is doing great today. Hope you were short or flat, and we'll look at the S&P and kind of jump in and see what's going on. So as you know, or you should know, we had a big sell-off in the market today, and we had a couple of things going on, big increase in coronavirus cases, and some France and Germany, I believe, are doing more shutdowns, that kind of thing. A lot of general tension as we approach the election, which is next week. And as we saw today, the S&P was down a whopping 119 points, I believe, was the final, about 119 points. And so it made for a pretty good down day. Most of that, we had about 50 points right at the open, and then we kept drifting lower all day, as you can see here. And what I've got up on the screen here, if you're not familiar with this, these are voodoo lines. As you can see, this is the green line is a tree line here, and we were looking at this. This is SPX, by the way. We're looking at this over the last couple of days, thinking we needed to break through the upper side of this to get any momentum to the upside, and we hit this thing over and over and over and over and over, and we did not, and we failed here miserably and kept going down. This is the white line is a snow line down here that we use. And we really kind of chopped all around it. You can see we kind of came back up there, tried to test it, did break through here, and then we failed into the end of the day, down to 32.68. Now we had quite a few levels here on the way down. 3,400, of course, that was broken really yesterday. Then all the way down, we've got a skyline here, again the snow line here, and we had a lot of fib levels all the way down here as well, that we just kept breaking through. Nothing was holding. So not good at all. Also, the VIX, which is, you don't hear much about it anymore, called the fear indicator, but it is, the VIX is indicative of the level of stress or tension, or you could say fear in the overall market, because it's the rolling 30-day average of the S&P 500 volatility. Anyway, the VIX went up over 40 today. It was closed at 40.28. It had been down in the mid-20s, which even that's high. Normally we're in 12-14 range in a quote-unquote normal market, in a upward trending market. It's been rising all the way, and that is primarily because of the sell-off, but also we've been getting rising volatility into the election. So that is the next big hurdle we've got to look at here. You guys know that I trade the S&P really every day, so I want to focus on this right now. So this is a 10-day chart here, and this is what I've been looking at here. That's Thursday 2 weeks ago, that's last Thursday, tomorrow's Thursday here. And I've been focusing on this tree line and thinking that we were going to bounce and kind of head up here to higher levels, and we came down, tried to rally, came right into the skyline here, failed, tried to hit it again, failed, tried to hit it again, failed again, took out the tree line here, and then we never, you can see we got, once you're on the other side of this acts as resistance. It's support up here, right? It's resistance once you're below it and you try to break through it. So now we've failed again here, so let's see what's below us, and to do that we have to go out on a larger time frame here and check this out. So where we are here, unfortunately, here is the gap that we had at the open today. We're up against our skyline there, snow line down here, which is also the previous low from this swing, gets us back down. This might hold, or we may actually come down to that. If that doesn't hold, we've got tree line down here, another tree line. This is tree line number 1, this is number 2, down all the way down at 31.18. This is not looking so crazy, right? And if you guys remember or watched the video I did a couple of weeks ago, I was saying on this flush down. First of all, I thought we'd come up here and hit this, and we didn't. We turned around and came back down here. I thought this level would hold and we would bounce and come back up. We didn't. Thought this tree line would hold, and we failed, and thought that snow line would probably hold. We failed. So this is, next target's here. Target TGT. Right here. If that doesn't hold, we go down here. Now, what could change all this? So we now have to, we always have to make some or anticipate things, right? This is looking very broken to the downside. But guess what we have tomorrow? Today's Wednesday. Tomorrow after the close, we've got Amazon reporting, we've got Apple reporting, we got Facebook reporting, and we've got Google reporting all at the same time after the close tomorrow. So guess what? That might make a big difference. All of them come out and crush numbers, crush earnings. We may get a big bounce up here. I don't know. That's Thursday. Not so much Friday, but that's really anything major is going to happen. But the next thing would be next Tuesday is the election, so maybe we come back down. I don't know. It's very, very, very up in the air right now. For that reason, I have been taking profits and taking money off the table, and I'm getting very light. And I'm planning on next Tuesday, not the election, Tuesday night, right? I'm planning on Tuesday, by the middle of the day on Tuesday, I probably will be flat and probably be all in cash with the exception of some hedging on the downside. Probably going to put some, I've got a little hedge already that's down here at 32.50, and I may set some more down here. I don't know. We'll see what happens after Amazon and Google and all that kind of stuff. If we rally up here, I probably will add more. If we come down, I probably will not add more because I don't want to short in the hole down here. And in fact, if we do end up coming down here, I may add some stuff up here and go out to end of November, maybe even end of December for an ultimate bounce up here. Again, way too early to tell, and I would prefer to be in cash as the election results come out. And we know it's probably going to be a couple of weeks minimum before we know anything, I would think, just because the contested election, it's already, motions have been filed and all this stuff's already in place to contest the election and all that kind of stuff. So it's going to be messy, which is good from a trading standpoint. We should, let me switch this over and I'll show you why. We have, see this volatility? Look at that. Really jacked up vols right here. And we use this to our advantage. We trade volatility, and that's what we want to do. Again, my plan is to be, I really want to be flat over the election, and then I'll immediately, depending on if we get a gap up or a gap down, I'll trade it. If we get chop, we'll still have some high volatility. I'll trade that. So that is my plan. And again, if you've never traded around this much volatility, go light, be very nimble, be very careful, keep a lot of cash. It's much better to miss opportunities than get slammed down in something. If we get a big slam down, or rip your head ripped off if you're short and this thing goes ripping straight up. And I really honestly have no idea which way we're going to go or how long it's going to take to get there because of the process we're probably going to have to go through this time on this election. So anyway, I hope that makes sense and helps. And again, be very careful out there in your trading. Take profit and take as much off the table as you can is the smartest thing to do. And don't assume anything with this election because it can go either way, and price and volatility both. So be careful. So I hope this helps, makes sense, and I'll talk to you guys next week. Maybe we'll have a much better idea by next Wednesday which way we're going to go, and I will talk to you then. Thanks.